Greetings, guys. Hope you're good today. Just a very quick analysis of US30. However, before we get into the actual charts, I just thought that I should remind you that on the 4th of July, it'll be a holiday in the US of A. So what that means is that when it comes to indices, and especially the American ones, liquidity will be low as a lot of people will be on holiday. And another thing is that the markets may move sideways as opposed to in a specific direction. So just bear that in mind if you do trade on the 4th of July. Myself, however, I will not be making any trades in any way. I will just be taking a break. Nonetheless, let's have a look at the US30. Yeah, so here we go. I've got the monthly chart open. And as you guys know by now that I usually analyze US30 just about every week. And in past videos, I spoke about the monthly chart at length, especially this part over here. Just bear with me. I spoke about how we have a very strong area of support there, as well as the fact that we have a W structure here. And the third thing I spoke about is the fact that price at the moment came here to retest the neckline of this W structure. And what is likely to happen is that from here, we might see price head up. And that is because a lot of institutions, hedge funds, and other financial bodies have started buying in this range over here as they anticipate that the market will push up, right? So over and above that, just bear in mind that we also have this candlestick over here, which is a liquidity candlestick. And as you know, guys, by now that liquidity candlesticks represent money, and one day the market will come here. It might take a year, it might take 2 years or 10 years, or whatever, but one day the market will come to this level to grab that liquidity, and that is because there's a lot of money stuck at that point. Anyway, from here I'm just gonna head down to the weekly chart. So here we are on the weekly chart. Let's have a look at last week's candle, Friday's candle, or rather, yeah, last week's candle. We can see that it closed as a very strong bullish candle, which also supports what I just said on the monthly candle, where I said that because we have that huge structure, that W structure, and price came down here, the anticipation is that it'll move up. So that seems to be in line with that observation. Um, by that I mean this actual candlestick right here, which is a strong bullish. It's actually an engulfing candlestick, an engulfing bullish candlestick. Anyway, let's proceed. Also, another thing that is important is that last week's candle, this bearish candle ended up or closed with a small body and a long lower wick. So we have a lot of liquidity stuck down there, and that um, yeah, we have a lot of liquidity stuck down there, and that means that before the market actually pushes further up, we have to see it come back to this level to grab that liquidity before actually doing so. So that may happen within the next couple of days or weeks. Nonetheless, I'm just going to mark that area as well. Just bear with me. There we go. Price needs to come here to grab liquidity, right? So what else do we see on this candlestick, or rather on this chart? We had spoken at length about the fact that we have a head and shoulders pattern there with the neckline being somewhere in that region. I'm just gonna add a neckline there, but I don't want to go too much into that structure because I spoke about it in previous videos. But for now, I'm just gonna add that neckline because it's still very much important, and it's now an area of resistance. We can see that this is our neckline more or less. Just bear with me. That's our neckline. Okay, so it's now an area of resistance. Anyway, let's proceed. Is there anything else on this weekly chart that we should be paying attention to? At this point, I don't see anything further. So what I'm gonna do is head down to the daily chart. Um, There we go. Here we are on the daily chart. The first thing that I'm going to do on this actual chart is add my channel. Just bear with me. Here we go. It just needs to be as accurate as possible, just to ensure that at the end of the day, when we do ultimately execute, our execution is as accurate as can be. There we go. There goes our daily chart. So let's have a look at last week's daily candle, which is Fridays. We can also see that that candle was a strong bullish candle, which also seems to suggest that price has to, move up. Nonetheless, let's also take a closer look at this candlestick over here. It is also a liquidity candlestick, and it tells us that as much as we want price to come to this level to grab liquidity, it also needs to come to this level to grab some more liquidity. So I'm just going to mark that area as well because it's very, very important. There we go. There we go. Right. So what else do we see on this chart? Let's see. What else do we see on this chart? So on the daily chart, we can see that the market actually is now in an uptrend, and that is because we have a low here, and then we have a high there, and then we have a low here, a high there, a higher low here, and a higher high there. So that, in my opinion, is an uptrend, and it'll be better visible actually on the 4-hour chart. It'll be better visible on the 4-hour chart, right? Or you could look at it like this. You could say that actually, okay, that's fine. That's fine. Let's just move forward. So let's see, what else do we see on this actual chart that is interesting or significant? So in previous videos, we also spoke about how we have this M structure over here, right, with the neckline being there, and I said that the neckline is yet to be tested. Ideally would love to see price come to this level again to retest that neckline. And in my on the bigger time frame, I spoke about this area. I said it's a very strong area of resistance, and that the market should at least come to that point from where it is after having triggered the liquidity that's actually down here. Anyway, let's proceed. I'm not going to pay too much attention to this M structure at this point in time. We'll do so once these two, I think, areas have been triggered by the market, or if price closes above this area over here, then the next target would be at least this point, and the next would be this point over here. So let's continue. Let's see. So we have another candlestick here, which is a liquidity candlestick, right at this level. So can you guys see that there is scope for price to actually keep moving down? As much as the indication is that price wants to go up or price should go up, there is scope for price to move further down because there's a lot of money trapped down there. There's a lot of money trapped down there, and the market must trade that money before pushing up, in my humble opinion. Um, anyway, what else do we see on this chart that is interesting? At this point, I don't see anything further. So what I'm gonna do is head down to the H4 chart. However, before I do so, let me just add a trend line quickly. Um, I think it's a very important trend line as well. There we go. There goes a trend line, right? So what may actually happen because we have this trend line is that because we had a rejection there, a rejection here, we might have a third rejection somewhere here, right? In which case, price will likely move downwards to grab the liquidity here, the liquidity there, as well as the liquidity here. And then from there, we might see an actual W formation forming and price heading up from there, at least to this point. Yeah. So anyway, let's proceed. From here, what I'm gonna do, as I said, is head down to the H4 chart. Here we are on the H4 chart. The first thing that I'm going to do on the H4 chart is just to make sure that my lines are accurate again, because what normally happens is that as you move from one chart to another, the lines get distorted for one reason or another. Just bear with me. There we go. There we go. All right. So here we are on the H4 chart. On the H4 chart, we have, let's see, so make it slightly bigger. So on the H4 chart, we had in this region an inverted head and shoulders pattern, with this being the first, I mean the left shoulder, this being the head, and this being the right hand shoulder. We also had a neckline here, and we saw that actually price came back to retest the neckline, and we were supposed to look for further buying opportunities at this point. We were gonna look for further buying opportunities at this point, right? And that is because when it comes to inverted head and shoulders patterns, once the neckline has been broken here, we expect price to come back to the neckline to retest it, and then that's where we would look for further buying opportunities, right? And that is also why we saw price bouncing here and pushing up. That is because a lot of people were buying at this point, right? Nonetheless, we still have liquidity candlesticks. Remember, we still have liquidity candlesticks at this point, as well as this point, and another at this point over here. But this one here is more visible on the daily chart. Anyway, let's proceed. So what else do we see on this chart, this H4 chart, that is interesting? We also have here an extended information with a neckline there. However, the neckline is yet to be tested. So what we expect to see in the future possibly is price um, testing the neckline of that M structure, and maybe from there pushing further down, right? So as much as we have, okay, before we continue, I'm just going to add a neckline as well to that structure. Here we go. There goes our neckline. Yeah, so as much as we have um, this M structure, just bear in mind that we also have an opposing W structure over here, which has a neckline over there, right? So I'm just gonna add a neckline to the W structure as well. Just bear with me. I hope my line is not confusing. Yeah, I'm just trying to make sure that you guys can see exactly what it is that I'm referring to by adding all of these lines. There we go. So guys, I usually say that when we have two structures that are opposing each other, it's very much risky to be taking any trades. And that is because we have an M formation and a W formation, and they both have necklines that are very much close to each other. So buying or selling in this region, I think, may be a bit tricky or risky, because what may happen is, let's say for example, because of this W structure, we decide to, let's say price pushes further out, then comes back to test it, and we buy here. What may happen is price may come here, bounce there, and then push further down to hit our stop loss, right? Similarly, when it comes to that M structure, what may happen is, because of this neckline, price price already broke this neckline, right? And the anticipation is that it should go back to the neckline to retest it. If we sell here, what may happen actually is that price may come here to this neckline and then push further up to hit our stop losses. So especially if you're trading on the H4 chart, it's probably best not to trade this particular movement. However, I think you can get away with it if you are executing your trades on the 15 chart, the 5-minute chart, as well as the 1-minute chart, right? But if you're executing on the H4 chart, I think this is a bit of a risky trade in that, as I said, the necklines are too close to each other. So it becomes a bit of a 50-50 gamble. And to be honest, I'm not a fan of gambling or taking trades that have a a risk to reward ratio of 1 to 1, which is 50%. Anyway, let's proceed. So what else do we see here that is interesting that we should be looking at? What else is interesting on this H4 chart that we should be looking at? Let's see. So the next thing that I'm going to do is add my channel actually on this H4 chart. Let's see. Just bear with me. There we go. There goes our channel. And yeah, you guys can see that we're actually in an upward, sloping movement or direction. Nonetheless, at the moment, the H the H4 chart seems to be also going down at the same time, right? But as I said, guys, we have a W structure here, and the neckline has been broken. So the anticipation from here is that price should move further up, come back to the neckline to retest it, and possibly move up, right? But just bear in mind of this M structure and that neckline as well. So I hope what I'm saying is making sense, right? So essentially, what I'm saying is, if you normally execute on the H4 chart, it is probably best not to take any trades at this point in time. Rather, at least if you're looking to buy, wait for price to close above this neckline and then come back to retest it maybe, and then you can start looking for buying opportunities. But you also have to keep in mind that we have this trend line over here, right? Let me just go back to the daily chart, just to get a bigger perspective in terms of what's going on. So here we are on the daily chart. Yeah, so on the daily chart, I spoke about all those areas at the bottom that are carrying that amount of money, and I said that the market is likely to actually push down. The market is likely to actually push down than actually go up, as much as we're seeing W structures, like this one over here, with the neckline being broken. Yeah, so for now, I don't see any buying or selling opportunities for now, but I expect price to move further down to grab all of those um, liquidity points that are at the bottom. So I hope that made sense, guys. If you have any further questions or comments, just make them in the relevant sections, and peace out.